DeRosa Insiders community. It's Matt Faircloth, and welcome to DeRosa Insiders Live. If you guys follow DeRosa at all, you probably are going to guess that my very special guest for today is my brother from another mother, our market hunter, my business partner. A lot of things to DeRosa. The third leg of the DeRosa tricycle, and that is my partner, my man, Hervé Francois. How are you today, buddy?
Hey, Matt, how's it going, man? Always great to be here. Great to see you. Third leg, huh? Third leg? Okay, thought it was second, but
The well, yeah, you can be the second. That's
yeah,
fine. Just give me the third leg.
yeah, I mean,
Yeah,
listen, here
the
to
third wheel in the tricycle. But you see, a tricycle is nothing without three wheels. A bar stool does not stand without three legs. These things collapse. There is a magic number in three. And so I'm really grateful in having you here, Hervé, to talk to us about markets, man. So Hervé, markets. It is, you can't just cast a fish hook into any market of the United States and expect to catch deals. People don't realize that I would say at least half of real estate investing success is choosing the market that's going to serve your goals, that's going to have the things that you need to achieve real growth. I don't think you can invest anywhere. I'm not a believer that one investment strategy works in every market in the United States. What do you think about that?
Yeah, no, I agree 100%, man. It's you want to, as you start this business, you're climbing this hill, trying to get to, if you want to call like a plateau mountain, the top of the mountain, to get to a level of comfort, to get to a level of maybe not necessarily ease, but certainly a cadence in which you understand the dynamics of a particular market. You understand the players and you get to know the players in that particular market. When I mean players, I'm talking about commercial brokers, I'm talking about attorneys, I'm talking about property managers, I'm talking about construction folks and everything else like that, right? That you have these folks when they talk about, the outside team that you need in order to get a real estate deal done. These are folks that you need to get your deals done, right? And so you want to be able to go to a market. You don't need to go to 2 or 3 or 10. You need to go to one market, plant your flag, and get to know that market's universe, right? And everything that is needed in order to go ahead and complete your real estate deal in that particular market. Again, the brokers, the lawyers, and PMs, and so on and so forth, right? And then from there, you're making a name for yourself. People are getting to know you. Other brokers are wanting to reach out to you because they see that you're buying in that market. Sellers may be reaching out to you because they see that you're buying in that market, and so on and so forth. So we love real estate, but we also know that real estate doesn't come without its challenges, right? And so is there anything that we can do as we are pursuing our journey, or as we are on our journey and pursuing our goals, to make this job, to make this cadence a little bit easier, so we're not always pedaling our bicycle uphill, if you will, right? And I think one of the things you can do to make your process easier, to make your journey easier, so you don't feel like you're pedaling uphill, is to don't go into a market where the competition is so incredibly intense, right? As you very well know, Matt, because you've been doing this for, 18, 19 years right now, the idea of syndicated deals and individual investors, private investors doing these large deals and getting investors into deals really started in earnest 10, 12 years ago. Many, 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 many years ago, there wasn't a bunch of private investors doing syndicated deals. It was pretty much left in the hands of institutional investors, private equity investors, family offices, and so on and so forth, right? But lenders opened up their checkbooks. They started lending out, right? We started seeing these conferences sprout up as bigger pockets grew. More investors, individual investors started getting into the business, best ever conferences, and so on and so forth. So now you're seeing competition going into these markets wanting to do deals, understandably,
Yep.
so, right? Because we talk about the benefits and the tax advantages and so on and so forth. But a lot of these investors are going into these bigger cities, the big cities that we know. And if you talk about the window, Atlanta and Charlotte and Dallas and Houston and Austin and Phoenix and Tampa and so on and so forth.
Where all the
Right?
cool kids are going, right, Hervé?
Cool kids are going, right? But guess what, man? There's some cool kids in some of these smaller cities, right? But not as many but great opportunities. And that's where, as you know, we've decided for DeRosa to make a living for ourselves. And that's what we kind of push to educate our students. Hey, think about investing in these secondary, even tertiary markets, just to go ahead. And so you will face less competition. And again, you're into an easier cadence and not having as much difficulty pedaling that bike uphill.
Yeah. I was just on the Bigger Pockets podcast. We just recorded this morning with Dave Meyer, new host. He's got an Instagram feed called the Data Deli.
Okay.
And we talked. What's that?
Yes. I've read a lot of Dave Meyer stuff. Very thorough.
Yeah. No, he's a smart dude. And we talked a lot about what you and I just referred to, about the cool kids, right? And about investing in markets where the cool kids are going and staying away from markets. And now, like we talked about Austin, Texas, right? And that. And like, great market. Austin's not going to crash and become like a zero market or whatever it is, but is it over invested because all the attention that it got? Absolutely. Is it overbuilt? Well, rents are down 8% this year in Austin, Texas, right? That's an example of an oversupply. That's going to happen. It's not because people can afford to live there anymore. It's because there's too many apartment buildings and rentals in that market that are competing for the same dollar, right? Austin will be fine. I do not shed a tear for those that are investing in Austin. I think they'll be just fine.
It's going to be just fine.
Yeah.
Going to be just fine.
You got to absorb all that, though.
You have to absorb it, right? And they needed to bring on all that supply because there was an imbalance on supply demand of units for the past 2 to 3 years, right? And when the pandemic came along, then we had very expensive raw materials, lumber prices, really that kind of just put new construction on the sidelines and things like that, right? Those issues, they've been dealt with, they've been alleviated, more supply hitting the market in a lot of those large cities, right? Austin being one of them. Austin is ranked third in the country that is receiving this, huge supply of incoming units into the market here in 2024. That being said, those big cities that I just mentioned, including Austin, they're going to be okay. They're going to
say it again. Are you saying 1/3 of the new deliveries of multifamily, 1/3 is in Austin?
Yeah, absolutely. It's Brooklyn, New York is number 1, Dallas, Texas is number 2, and Austin is a little lower at number 3.
Huh.
Yeah.
Brooklyn, New York. Huh.
Brooklyn, New York, man.
You don't hear about that. Yeah.
We supply, but an example of another city or borough of New York, right? One of the 5 boroughs of New York, in which, again, living expenses in Manhattan, absolutely astronomical, right? And this is one of the boroughs right across the bridges, Manhattan Bridge and Brooklyn Bridge, that people can move into, yet at the same time, they can easily get into Manhattan for work, for school, just by taking the subway, right? And go ahead and you cut your property prices down.
Yeah, absolutely. So Hervé, there's an article that you and I that you wanted to highlight for us here that maybe we can unpack, and maybe our man Nabiku can post it out here. But we got here 10 benefits of investing in secondary and tertiary markets, which is what we do. And I'm not saying that we're not going to talk today about why you should not invest in Austin. If you want to do that, great. You live in Austin, or you got contacts there, or if you just believe that's where it's going to go. As Hervé said, it's going to be fine. That market's not going to crash. But we believe at DeRosa, there is a strong philosophy we have with our accelerator students that we talk about, which is that there is money to be made in these not major metros, but in the secondary cities that are just next door.
Yeah.
So talk to me, Hervé, about this article you got, and we can start to unpack it.
Yeah, so this article is real interesting, right? I mean, it's a lot. It just kind of goes over a lot of the reasons why we decide to go ahead and invest in secondary markets. And this is the 10 benefits of investing in secondary and what they also call tertiary markets and things like that. And so I read it and I was like, you know what, this is kind of interesting. They summarize it very, very well. They hit a lot of the points that we know about. They did bring up some other interesting points. They're like, that's also an interesting point that we can absorb and put our arms around as well. So I think they make a strong case for it, and they're able to make a strong case for investing in secondary and tertiary markets without, like you said, without having to knock down the benefits and attractiveness of investing in the larger primary metro markets and things like that. So again, just like you said, if Austin is where you want to invest, if Dallas, Phoenix is where you want to invest, absolutely have at it. all our point is that it doesn't need to be as difficult. It doesn't need to be as challenging for you to find opportunities in those primary markets when you can find just as much, if not more, with attractive returns, opportunities in secondary and tertiary markets. And then
Mhm.
there's a whole bunch of other reasons of why to invest in these secondary and tertiary markets.